Good evening, everyone. I think after a lot of digital and cloud discussions, let's get back to our brick and mortar infrastructure and infrastructure financing. It's really a privilege to be moderating this stellar panel today. Probably between them, they have more than 150 years of banking experience, financing experience, and they bring various elements, and they have looked at the whole business of infrastructure financing from their vantage points. We'll probably keep ourselves to three themes. There are no presentations. We have three themes for discussion. We'll speak about the opportunity in infrastructure financing. We will speak about the overall risk management and how do we think about enablers for infrastructure financing. And we also want to talk about how do we think of long-term liabilities and how do we think about risk capital for infrastructure financing. So let me just get straight away started. I think we have already heard the introductions briefly from our compeer and MC. So, we hear really big numbers on infrastructure. This year's budget spoke about a 10 lakh crore rupee push. We heard about NIIF getting continuously populated with more and more projects. We hear about PM Gati Shakti. We hear about on the other hand, hyperscalers on the data center side. We speak about green infrastructure. Road infrastructure continues to gallop with 37 kilometers per day kind of construction coming through. New areas, northeast, so there are multiple programs being launched. So, Mr. Rai, I want to start with you, and and then Mr. Gadkari, you can come in on how do you, there's a lot of announcement. You have personally taken a huge step forward to be heading NaBFID. How do you see these opportunities? Are they really matching with what is happening on the ground? Just give us a little bit of a perspective on infrastructure financing opportunities.
Thank you, Ashish. There are a lot of opportunities actually on the national infrastructure pipeline, which was announced actually, that on which everybody is discussing, which is 110 lakh crores, which has to happen to achieve our 5 trillion economy also. So there are certain things which have taken off very well. As you rightly mentioned, road is one area. Transmission, electrical transmission is some like where we see a lot of interest. But then there are many areas where, like in the process of taking off, we can talk of railways. Railways is a big chunk in this national infrastructure pipeline, which has not seen much traction, even though there are a lot of discussion going on. Urban infra. Because, see, India is slowly moving from the rural to the urban side. Actually, the population on the rural side, if you look at the census also, like a lot of urbanization is happening. With that, the urban infrastructure, particularly on the drinking water side, sewage, maybe building metros and better connectivity, housing, affordable housing, most of these things have to happen. Otherwise, again, you will not have a proper development of cities to accommodate people. As a developing economy, it is important for us to invest on urban infra. Another is the healthcare. Actually, they are also coming under infrastructure, setting up of medical colleges. There is a talk of having a medical college in every district, then the hospitals. So then tourism. India is a beautiful country with so much of tourism opportunities actually. But then, not much investment has gone, the quality hotels. So they are all under infra development. They are all in the pipeline. But then we need to really work hard to make it bankable. Actually, many times the projects are talked about, saying that this is what we want to do. I just want to add another big thing is the inland connectivity. This is a huge thing actually. Because this is the cheapest mode of transport. But then it will need huge investment. So the challenge in front of us is the pipelines are there and all of us need these pipelines. But then we need to work to convert many of these projects into bankable projects, for which right project assessment, study and all that should happen. And then actually like lenders and the people who bring in equity to these projects, they have to be assured that there will be decent returns for their investments. So we need to build that ecosystem, so then this can convert. So the opportunities are huge, but then our task is cut out in creating the right ecosystem to take it, so that this takes off.
Thank you. I think I'll just build upon what Mr. Rai said. He's already covered part of what I would have answered. Maybe I will also approach it from two different perspectives. From a macro perspective, especially for all our banking colleagues and audience, The opportunity set really involves, there are these two large programs which are going on. And Mr. Rai talked about the National Infrastructure Pipeline, which is a $1.4 trillion program, which is really about creation of new assets, and that involves extensive greenfield and brownfield development of assets, which means one has to be adept at taking project financing risk, assessing those. Obviously, it will involve working capital and other kinds of financing at a later stage. So that's one set of opportunity. And under the National Infrastructure Pipeline, I think the big sectors really are energy, urban, railways. These are the three biggest areas. And underlying, as Mr. Rai alluded to, underlying projects will come about. They need some preparation. The second sister opportunity of the NIP is really what is called the National Monetization Pipeline, which is about $80-90 billion, again a sizable thing. And that's a much, in a relative sense, a less riskier thing, because it involves extensively operating assets, where government is really selling off or monetizing assets, and where there are established cash flows, established contracts in place, and that's another set of opportunities. And here the big sectors are really transmission lines, highways, airports. Those are the kind of sectors the government is trying to do. The another thing I think Ashish, you alluded to, and that's again a big theme we are seeing, is really around green financing, climate-related infrastructure. And there are again specific sets of opportunities there. Whether it's on the water side, there is this National Mission for Clean Ganga, underneath which I think around 80 to 100 number of projects are going on, some through HAM contracts, some through EPC contracts. So I think that's another set of opportunity which is coming up. Then government is doing large format electric bus tenders. Recently CSL tendered out about 5,000 electric buses, which Tata Motors won. So these are newer kind of things which are coming up. There is offshore wind sector which is coming. There is green hydrogen. So a lot of new things coming alongside the traditional sectors. And I think one has to pick and choose which ones you want to attack.
Thanks, Prasad. So clearly there is so much opportunities here. At some point of time, we will request the panelists to share how bankers should think about developing capabilities to be able to address some of that. I'll move to Mr. Mehta now. Mr. Mehta, you have seen this all. You have seen the world from a variety of angles, as board members, as part of some cabinet committee meetings. Tell us, is there the economic case for investing in infrastructure clear? Do we still need government help to invest in infrastructure, or do you think the sustainability of infrastructure financing is there?
So, I totally endorse the views expressed by Rajkiran Raiji and Mr. Prasad that India is a land of opportunities. As regards infrastructure, I think we are at a much lower level of development as compared to the other developed countries, and there is a great scope, and that leaves us the greater scope for investment in the infrastructure sector. As regards help of the government, yes, no infrastructure project can grow without the help of the government, because infrastructure projects are basically meant for public. And when the infrastructure projects are meant for public, their revenue will come from public, their utilization will be by public, and the representative of public is the government. So without their support, no infrastructure project can succeed. Why I'm saying so? If you say road projects, ultimate owner of the land is the government. Ultimately, they have the ultimate rights. Because even in the constitution, the directive principle, land is just not a fundamental right. It's a government has the right to acquire it and can say it. So without the government support to go forward in infrastructure is not difficult. But thanks to the government, they have already recognized this requirement, and they have created a new institution, NaBFID, which is headed by Rajkiran Raiji, looking for a special direction, reviving the infrastructure funding to face these challenges. And infrastructure will definitely require a great amount of funding, which may not be able to come only from one or two sources. So we will have to create a basket. And as rightly said by Mr. Prasad, then there will be infrastructure project which can contribute for any green financing. So we can even source the international funds which can offer us a cheaper funds for a green financing. Then there can be some infrastructure projects which may get a interest by the long-term PE funds and all that. So India has got a potential. Now, only thing is to creating that basket for investment into this, because solely the government cannot contribute for it, and creating a right ecosystem will definitely fill up the aspirations of the Indian economy of 5 trillion economy, because infrastructure will produce employment. Infrastructure will definitely push up all these things.
No, thank you. Absolutely. The value and the multiplier of infrastructure is absolutely It's kind of almost like a law. Let me turn the issue on its head and let me get to Mr. Dube. If we just look around the last few years, India's position in geopolitics has changed dramatically. We are becoming much more bolder. Our assertion on the world platform is changing a lot. And on other side, we see China kind of flexing its muscle, but also learning and failing on its entire BRI, the Belt and Road Initiative. I just wonder, as financiers and bankers, do you see opportunities outside India on infrastructure financing, which could, be a win-win in terms of, for example, getting the right returns and also working with developers in India? Have you thought about it?
Thank you, Ashish. That's a very interesting question actually you have asked. My co-panelists have discussed the enormous opportunities that are available in infrastructure in India. But COVID has been a great learner for all of us. And one of the important learnings that have come from COVID is, prior to COVID, if you think of it, the supply chain management, the globalization of supply chain management, moving to the places where you had the minimum costs involved was the in thing. But suddenly COVID has made us realize that entirely supply chain management based on globalization principles may not work efficiently. And then, as you rightly said, the one particular country, Belt and Road Initiative, COVID, specifically the period, has brought out a lot of negatives which has resulted in that country losing its trust. Simultaneously, when I talk of it, what I'm also talking about is, during this period, again as a learner, the COVID vaccine, and not only we vaccinated our own people, we helped many other countries in terms of the vaccination program. And while we have crossed 200 crores plus of vaccination, even today, October 2022 figures when I see, Africa vaccination is only 24%. And one of the basic causes that has been realized is lack of basic infrastructure there, lack of roads, lack of cold chain storage facilities, lack of power. So the point is, in this recent report which has come by the World Economic Forum, the Global Risks Report 2022, they very clearly specified that when we talk of development, it cannot be restricted to one country per se. It has to be on a global basis where international dependencies and international cooperation is the only way forward. So having said that, what I am coming to is, जो एक हमारे संस्कृति है वासुदेव कुटुंबकम, उसी को आगे बढ़ाते हुए, and given that whatever my colleagues have talked about the experience that India has, in fact, it is one of the smallest per capita, lowest per capita carbon footprint in terms of the infrastructure development that we have done. So that becomes a very strong plus point for us to now branch out. And there are enough countries who are out there who would be benefited by the expertise that we have developed, both in terms of, when I'm talking of expertise, I'm talking both in terms of the real estate development companies and also in terms of the financing institutions. Let me just one point more, which is, when I'm talking of this, one important aspect is, essentially this becomes a soft power for the country, brand India. And to that extent, it is also important, imperative for all of us, that when we talk of this sort of globalization where India and Indian companies go abroad, help in infrastructure development, for which there's immense potential, we as citizens, as countrymen, as fellow countrymen, should be very clear about 2 points. One is quality, which I basically call as economic sustainability, and the second is environmental sustainability. That is what is actually going to help our country go forward further.
This is very interesting. Mr. Dube has kind of given a roadmap of how at least a large lender is thinking about new opportunities. I'm sure many bankers will be inspired by that. Gurpreet, I'll turn to you. You know, these are dizzy numbers. $1 trillion, $1.4 trillion. This massive numbers come there. But one wonders, where is this money going to come from, right? We were just having a discussion in the pre-session enclosure. There's hardly any bond issuance, for example. Yes, of course, InvITs are starting to come in, new product structures like takeout financing, refinancing. We're starting to see a little bit of that. But they are nowhere to match this kind of a demand. You have any thoughts on how India can think about a bond market development to really get infrastructure financing going?
Thanks. I think you've come to a very relevant point. I think what we've seen is that, like my fellow panelists, Mr. Rai, Mr. Mehta, talked about great opportunity, and we're talking about hundreds of lakhs going to be spent. And obviously, as one of the panelists rightly mentioned, that infrastructure is a common good. The government needs to enable that. But obviously, the government can't spend all the money. You need private sector participation. So we think bond market in India isn't really firing from a perspective to fund infrastructure. What we've seen bond market really doing, we have a few central counterparties like NHI, PGCIL, all of them. If they go to the bond market, they will get money. But obviously for the private sector, it isn't very easy to get money from the bond market. I think this is also to some extent, I would say, a perception problem. We've had times in the past where we've seen some of the traditional bond market investors, and traditional bond market investors are pension funds, insurance companies, mutual funds. I think these are guys who largely fund the bond market. I think they've had significant losses which have come from infrastructure. I think they haven't, they've been shy around it. I think it's a perception problem today. I think we've seen over the last, I would say about 8-10 years, a significant amount of change happening in the way infrastructure is funded and financed. We've seen far more fair concessions being today there. If you see the HAM concession today vis-a-vis what was there about 12 years back for BOT, I think it's a sea change in terms of fairer concessions. We have central counterparties playing a very disproportionate role today in infrastructure funding. If you see NHI or, for example, SECI, any of the projects which they are counterparties to, the stakeholders, the investors, the developers, the lenders are far more comfortable than if there is any other counterparty. We've also seen the IBC, I think, while there's a lot to be done there, but I think that's also helped in very fast resolution for many of the assets. And lastly, I would say the InvIT and the REIT, the way they have developed, I think is a very large boon or a very big boon for infrastructure financing in the country. It basically, what it does is it reduces the leverage to 50% and has only operational infrastructure. If you have those, we've seen that being far more stable from a credit quality perspective. So I think all this is, I think we need to do a far better job in trying to work with the bond market participants to try to get them to understand this and then start lending to it, because technically when you're funding infrastructure, it's a 20-year contract on one side. You need 20-year money, and the guys who can give you 20-year money is a pension fund and insurance company. It isn't a bank. The bank has, they have their ability to kickstart all of it. At some point in time, they will hit sectoral caps. I think that's one aspect. The other is traditionally bond market in India is developing as we go along. Today it is 6-7 lakh crore which actually gets issued in a year. It's a total 40 lakh crore market. It isn't a small market. Dominated by some of the large players. We believe some of the other aspects which will help is how to create institutions. Again, as I said, in India, infrastructure, you would need central counterparties to help. I think one of the important institution which we believe will kickstart or push investments as well as bond market investments is the institution Mr. Rai is heading. I think it will play a very stellar role over the next, I think, 5 to 10 years in the way infrastructure is financed through direct funding or through providing guarantees. We would need more institutions around similar, which will help make market. I mean, you need secondary market liquidity in the bond side. I think we would need market making institutions. We would need ways to attract foreign capital, retail capital to ensure that we develop the bond market. Our sense is as we go down the road, we do this right, we will have bond market funding a good portion of Indian infrastructure.
Fantastic. Thanks. We really look forward to participating as retail investors in some of these bonds. China, for example, has done a fantastic job with their bond markets. This is actually a very pleasant experience to see such large audience at 6 p.m. So we are going to have the session done a little differently. After 2 questions, I'm going to open for a brief time for some audience questions. So I'll be very happy to take a few questions after 2 questions. If you have some thoughts, 2 or 3 questions, we can take that up. Mr. Rai, you were brought in by Gurpreet a couple of times as from an institution perspective. You have also been given 20,000 crore rupees by government, but the roadmap and the vision for you is huge. 3 lakh crore rupees, 5 lakh crore rupees. Obviously, you will need to tap into some pots of money. What's your thought about the insurance and pension markets in the country?
The advantage today in India is we have a thriving insurance and pension fund mobilization. Actually, they're all growing at double digits. The assets they're holding is phenomenal. They're growing very fast. So naturally, they need to take long-term investments calls. Basically, they generally need 20-year, 30-year kind of bonds, actually. So this is exactly what we need, actually, for the infrastructure funding. We need to build the right system, actually, to tap that money. As an institution, actually, like when we talk of bond market, there are 2 major markets. One is as an institution, I raise money by way of bonds from insurance and pension fund and then lend to the people like, companies for execution of work, or the companies directly raising in the bond market. I think the ideal thing is companies directly raising. So that maturity of the markets will come over a period of time. As Mr. Chhatwal mentioned, actually, we need to provide sufficient liquidity in the secondary market, actually, for the bond market to thrive, particularly the long-term bond market. Actually, particularly in India, about 10-year bond market is actually non-existent. So there are huge funds. Actually, we see in the present situation, according to the assessment, the insurance and pension funds in 23 itself can invest about 2.5 lakh crores in the infrastructure bonds. That is huge money, actually, like which will supplement our efforts. So now as an organization, we have multiple sources to depend on, but insurance and pension funds are major sources, both domestically and internationally. See, one small thing I want to put it across. Today, there is a lot of financial savings happening across, both domestically and internationally, and particularly on insurance and pension funds. That's why we see a lot of interest from Singapore or Canada in many of our assets, basically. They're all searching for good assets which can give good returns. Basically, if you are able to sell our assets right, to create the right ecosystem and structures, I think raising resources should not be a problem. So that is my thing. I'll chip in at the right point of time.
So, let me get you in, Prasad. There are 2 visuals I have. There is a visual I have of all these global SWFs with trillions of dollars invested in infrastructure, long-term money, chasing 8-9% kind of, dollar return, 10% dollar return. On the other side, you have Indian risk capital, which typically will not be happy with anything which is not around 20%. You have probably tried to saddle, given that you are running multiple funds, you are into multiple sectors. What's your perspective on risk capital, both from the international perspective, but also from Indian perspective? And how do you think we can channelize some of this money into prospects that Mr. Rai mentioned?
So Ashish, I think on this, couple of things have happened. Firstly, I think from a government perspective, there are, especially in the last 4 or 5 years, we see there are different structures which have been created to tap different kinds of, because not everybody is going to be open to taking all kinds of risk. So people who are okay with operating risk and cash flow based thing, you have InvITs, you have infrastructure debt funds, those kind of instruments have been created, and those are the instruments which pension funds are coming into, some of the global insurance funds have come into. Separately, like NaBFID now, 5 years back, NIIF got created. So we have created a kind of a particular investment strategy to tap these investors. So what we have done is we have really 3 funds that we have created underlying the NIIF structure. One is a pure infrastructure fund, and this is extensively focusing on operating assets with selectively developmental stuff. That's where we have been able to bring some of the largest Canadian pension funds, Australian pension funds, Middle Eastern investors, sovereign funds from Southeast Asia, because they were happy with that risk-return profile. Then we have a fund-of-fund product, which is really not investing into projects, but we thought we will leverage and create many more funds underneath, which will then invest in companies and projects. That is where we have been able to get multilaterals as partners. So whether it's Asian Infrastructure Investment Bank, ADB, BRICS Bank, all of these guys have come in. We have created a third pocket, which is really looking a little bit on what we call a growth equity fund, which is looking at newer sectors, whether it's manufacturing, electric mobility, healthcare, and that's where we are looking at a third set of investors. So really tailoring your strategy depending on what the investor profile will look like or what it will be comfortable with. I think that's really the trick which the government has also tried to work on. That is what as NIIF we've been trying to work on. And overall, finally, the trillions and the billions of dollars, what you're talking about, India will not have one way, right? We need a basket and multi-pronged strategy over a sustained period of time to really raise the capital which we want.
Godspeed, we really hope some of this kind of plays out. And actually, it's fascinating to hear what NIIF has already done in terms of multiple structures. As I promised, I'm happy to take 2 or 3 questions. Okay, gentlemen, right there, you raise up. Can somebody just put up right there? So just keep the question brief. We have a lot more questions to ask our panelists.
Thank you. So I'm Rohan, and I actually write on infrastructure projects and policies for a UK-based publication called Infralogic. I cover the South Asia region. I have an observation and a comment. One observation, I think, is we're not really calling a spade a spade. The NIIF, for instance, was, you see the charter of the NIIF. Nowhere does it say it cannot invest in greenfield projects. That's what the government wanted when they said we will set up an institution called the NIIF 10 years back. Yeah, I think when the government came to power. But so far it's been a private equity style kind of investment. They finally didn't go ahead and invest in first try. There was a lot of criticism on that. An online child retail store. So that's where it's been as far as the NIIF is concerned. It has come in for a lot of flack, not least from the roads minister himself on several public forums. That's one observation on the NIIF. I think maybe it's because of that, the lack of greenfield finance, because of the NIP that we are talking about, the need for the DIF that came about, and Mr. Rai is sitting here today. So question for Mr. Rai is, how are you going about, can you tell us something about how you're going about the job of this new bank? Today, we're...
So let me just, because I'm just wondering there are 2 or 3 more questions. So if you can just lay out your vision for NaBFID. I think the question is, how do you want to go ahead and kind of...
Yeah, but specifically, today we are seeing projects going up for financial closure only from roads. We are talking about this healthcare and this and that, but there are no DPRs for that.
Yeah, let's hear him. So, sir, there is obviously the demand is there, the excitement is there. You have almost donned the chair of a startup. So, what's your vision to take this forward, sir?
Yeah. First clarity on behalf of NIIF. Actually, maybe many times we don't know what NIIF has done. NIIF has done a lot of innovative things. Maybe you have to sit with Prasad to understand, because I spent some time with him to understand, and they have done a lot of things. But then generally these kind of things take time to really play out. Creating structures which are non-existent and then attracting investment and getting the right talent to do that, it is this thing. So don't have a preconceived notion that things are not happening. It is not moved as fast as it should have been, but then there are issues. But then they have done a lot of work. When it comes to NaBFID, see, we are a DFI where we are also lenders, actually, but financing is not the only job. Actually, our role is actually our multi-fold, actually. Developing a long-term bond market is one of our mandates. And also, creating the right ecosystem. Basically, ecosystem where we do the right project assessments, build right kind of structures for financing, and then crowding in investment, basically. So we need to attract investment. We are also lenders, but then we also have to bring in a lot of other investors to this project. Now in the specific point, actually, basically, your thought may be flowing because some of the projects actually do not get the financial closure and all that. But then I feel, because I was heading a commercial bank, quite large commercial bank for 5 years, and I know almost all the infrastructure companies. For the right kind of companies, where the bidding is right and if it is viable, we have not seen any problem in financial closures. The financial closure problem comes if the company doesn't have the right credibility, and we have a problem in the way they have bid for a project. Basically, we see a viability issue there. So banks have learned their lessons. In the last 10 years, there is a lot of information in the ecosystem about failure of infra projects. Even though government has corrected many of that. HAM is one product of that correction. So,
no.
Yeah.
Sorry. I'm just going to, this is our limited time panel.
Can I just
not have a follow-up question?
One question.
Yes,
Mr. Rajkiran Roy. Sir, we are all accustomed in India of lending for 7 years, 8 years, 10 years. And now we are talking about 20 years, 25 years. These are all long-term projects, large projects. So how do you see, like Mr. Mehta has said, that the government role will be very, very important? Because many of these projects are based on the government policies and plans. So looking at our Indian political system, like you see bullet train, only one state stopped it for 1 year, the project. So how do you see and how do you mitigate the risk, and avoid this mismatch of short term and long term? Like those Latin American countries, they borrowed for only 8-10 years and put up the project for 20-25 years, like even Malaysia. So how do you balance it here in India suddenly with this, your company, which is talking about 2 lakh crore, 3 lakh crore rupees investment?
Let me rephrase the question, sir. So the point is, everyone understands there's a policy risk, political risk.
I'm Ashok Ajmera.
Some of these
Thank you,
projects. So is there a portfolio approach which kind of balances us out? Is there a continuous dialogue that you need to have with stakeholders to kind of move forward? If you can throw some perspective, sir.
Yeah, actually, these are the risks basically nowadays. The right covenants are also put, actually. If there is a political risk. Actually, this is a dispute resolution, basically. When the project goes right, there is no issue. Only when there is a political risk or a policy change and all that. So we need to put the right covenants. It is a dispute resolution. And I think we have evolved well in this front also. That way, today substitution in projects and termination payments in projects have come out very well. So now I think we are learning. These issues have happened earlier, but I think right now we are attracting a lot of money here. See, actually, a lot of money is flowing into the current country today in brownfield projects. Not in greenfield yet, actually, but brownfield we are seeing a lot of interest. Only because the policy is much more comfortable today. So I think the resolution, basically, it is not in our hands, but then the stakeholders, like government, have realized. So today, some of the states, which are not in the right, they don't act in the right spirit, they get punished. So, because there is no investment which will flow there. So, states which are proactive, there is a lot of investment flowing there. So, I think the differentiation the market will create the differentiation.
Absolutely. So we'll give Mr. Rai time to breathe. I'll come to Gurpreet back. Gurpreet, one of the things is how, while we have a very good data infrastructure being created on our retail side, with credit bureaus out there, we also have something now. There are multiple credit bureaus out there. How do we think about data, analytics, from an infrastructure perspective? I mean, the famous ROCks initiative of World Bank is well known. As a data company or in some ways analytics company, how do you think about that? And then maybe Mr. Dube, I'll come to you on how, as a banker, you think about a portfolio approach to infrastructure.
No, thank you. It's a good question. I think we've seen a very strong retail revolution, or at least the NBFC revolution, consumer credit coming at the back of credit bureaus. I think infrastructure also needs something similar. We have as I would say, some of it is today we are moving in the right directions. We've started in some manner. I think the direction is very positive. As I was talking, one of the regulations or one of the SEBI initiatives which I thought is very conducive for infrastructure development, I talked about REIT, I think it's also linked to data. Today, we have more than 20 REITs and InvITs listed. Each of them have a data stream which is coming out in the public domain. So if you take roads, there are about 6 to 7 in which listed. You have data available of traffic available out there. We have on power, transmission, etc. Each of these have listed InvITs coming out. Previously, all the analytics or data about infrastructure used to be either lying with banks or investing institutions. It wasn't available in a public domain. So a data stream of, say, for example, what is the irradiation or the PLF for solar plants wasn't available. It was available in a particular bank or 2 banks or 5 banks. Today, with this aspect, we are seeing far more data streams coming in public domain. A big data source would, at some point in time, will be the toll data which NHI has. Today, NHI, the way it's developed, has a very large data sets which are available in public domain. So I think the important perspective here is that better data will crowd in investments, and we are seeing that happening. Today, we have a sister arm called CRISIL Research. Actually, it publishes for the 2 asset classes, both roads as well as renewables. I think a good amount of data for a large number of projects are available with them, many of them from public sources, as I talked about, many of them from secondary sources by discussion, etc. There are good data streams. We've seen lenders, we've seen investors getting this data to help them out. I think we are in the right direction. So we would, I mean, our sense is that some of these large central counterparties have a decent amount of data. We should figure out a way how to put that in public domain to help lenders and other institutions take calls.
That's very useful. I think as lenders, we really need to think about data, and I'm very impressed to see so much data is available on some of these sectors. Mr. Dube?
Yeah, when you talk of portfolio approach, essentially when one gentleman was asking about one particular project and the difference of opinion between different political parties which led to certain delays. See, I put it this way, the difference of opinion is the strength of our country. And infrastructure projects being long-term will always have this issue which we all have seen in the past and will continue in the future. And that's where this portfolio approach as a word when we are using, it could be not only in terms of technology used, it could be in terms of the projects that we are looking at, it could be in terms of the funding processes that we are talking of. So that is a बहुत पुरानी saying है ना, don't put all your eggs in one basket. Essentially, infrastructure project also diversify yourself across technologies, across geographies, across types, funding, ratings. Things will work out.
All right. That's a very simple but very, very sagely advice. Mr. Mehta, I have a question for you. Look, recovery is, in some ways, one can say the other side of lending coin, right? I mean, you will lend and you will have to recover. This is a business. But, a question kind of emanated there. There was a dispute resolution point that Mr. Rai mentioned. Is there something specific that needs to be done at an industry level which helps? I mean, you have been really passionate and you have seen good times, bad times, which can be really done at an industry level which helps in infra recovery?
Well, there is a scope for a lot of improvement in this sector. And I think government is also gearing it up the way the earlier road structure, the BBB model was introduced. And then they realized that there can be a variance, maybe because of the construction of a parallel road, maybe because of some other political issues. So they created a HEM model where, at least to an extent, the cash flows come through a annuity model, and the cash flow risk is minimized. The construction risk still continues, but the cash flow risk is minimized. So that is one improvement which the government has brought. Then the secondary thing which the government is now working on, and what the entire ecosystem need to work on, is creating the value of and sanctity of the contracts. Like once the contract is reached between an entrepreneur and a government, come what may, that should be honored, and that is one priority which the government has to find, maybe through legislation or administrative measures, that once any funding for infrastructure project has been done, then whatsoever was the initial agreements, if at all that is breached, then there has to be a reserve compensation, and that compensation need to be faster, and for which mechanism need to be created. So there is a need for it. And this can definitely be inbuilt into the covenants while giving the loans. This can also be a tripartite agreement between the government and the entrepreneur as well as the financial system which lends to it. And that will facilitate the greater investor confidence in investing their money into the infrastructure project. So dispute resolution, its speed, and preventing the dispute by enabling a mechanism into the covenants, into the contract will definitely facilitate this.
Just to add to what Mehta Saab has said, see, when we look at the past, the recovery issues that we faced, but going forward, the technology that is now available, which was not earlier, need to make more use of it. When I say this, essentially just take FASTag as an example. Prior to implementation of FASTag, the per day toll collection in our country was approximately 45 crores per day. Post FASTag implementation, now it is crossing 130 crores per day, which means the pilferage of around 90 crores per day, which was happening, which was ultimately hitting the bankers only, the financiers, because the money was getting pilfered. And I'm talking of nearly 90 crores per day, which logically should have come as a recovery to the banker, was not coming. So once we have more integration of the technologies available, and FASTag is one prime example already available, and just to take it forward, maybe when we talk of the throughput on the ports, you have transponders, etc., which will actually have a very real-time sort of a tracking, monitoring available to the bankers and ensure that the funds are automatically flowing into the accounts. So then you are basically taking out the pilferage and the misreporting which was otherwise happening. Recoveries get ascertained.
Excellent, excellent. That's good news. Let's take two questions. Yes, sir.
Hello.
Yes, sir. Please go ahead, sir. You had the question. Yes, sir. You have the mic, sir. Yes, go ahead, sir.
So I think the key question which you raised is that we see a great opportunity, but where will this dollar come from?
Yeah.
And I think we talked about pension fund and insurance fund and capital market, bond markets. I think the critical question, I think Mr. Mehta, you mentioned, and Mr. Rai and Mr. Gadkari, I think the critical question here is the enforceability of contract. We are basically bottom last 20 in the world. Our ranking is 163 out of 180. And therefore, whether it's an Andhra government, you can get out. Whether it's an NHAI, once the toll once there is an upside, the toll is stopped. So I would say that's an important thing. And one critical issue in that is that if you look at the entire contractual framework in India, it's all contracts, not government. And therefore, what you require is a government policy. And there is an act of government, and the projects get awarded under an act. Now all these projects are awarded under contract. And that is a big problem, and I would say that's an important part what you said, that you won't be able to raise that capital, what we are talking about, trillions of dollars, unless that risk which Mr. Mehta mentioned get actually...
Yeah, absolutely, sir. I think that's a great point, and let's keep making that points at the right forums. Yes, sir. So one there, and then we'll come back to our panelists for final round, final set, sir. Yep. Sir, I'll just take that and then come back to you. Yes, sir, please. Just keep it brief, sir.
Yeah,
if there's a question.
Very brief. I think Mr. Rajkiran has confirmed that we have to have an asset so that the funding is continuous. Sir, when we go around the country, I mean, when I see the maturity experience and the kind of we have, I think a different model has to be seen to create the infrastructure needed by the country. Whether it's a road, it's a health, educations, and there, believe me, no private investor. Talk about any group in India, there is a limitation. There's a limitation of 3 year, 4 year, 5 year, 15, 20 years. I think government has to come out with some PPP model. These are the district, these are the road, these are the hotels, these are the thing which is required, and this maturity and experience and credential should be utilized for the speedy implementation. Now those things are procedure issue, the ratings, and then those things, I think a team has to come out and see that what the country needs has to be done.
Thank you very much, sir. I'll take one or two comments, sir, your comment and your comments. Sorry, sir, we'll just come back.
In addition to that, my question is for Mr. Rai. See, there are number of large stalled projects in different sectors where banks has lent lot of money. But since these projects have been stalled, so those projects have come into the NPA. So what will be your approach for continuation of these projects so that these projects are completed and there is a win-win situation for the banks as well as for the project owners?
There's a wish kind of thing. Yeah.
See, in your earlier avatar, you were on the government, you were monitoring this. See, there is a stalled project monitoring group in the government, and there is a very effective monitoring. There are multiple issues in this. I think we don't have that time to discuss these issues. But then what we should see is, basically many of these problems are flowing from the earlier way of doing infrastructure planning and financing. What we have seen in the last 7-8 years, actually we have not seen much problem in infra projects. The project launched afterwards, I think they are all progressing very smoothly, getting completed very smoothly. Yes, we inherited some old problems which we have to sort out over a period of time. There are multiple issues there, right from environment to land acquisition to, and actually because of the delays, the promoters also have run away now. So I think these are the issues which have to be tackled separately.
Sir.
So for a country like India, like developing country, and a lot of infrastructure is required, right? And a lot of in the pipeline. But one important thing for us is to think about the human capital, right? So we need the workforce to implement this infrastructure. What are your thoughts about whether government is doing enough for such workforce? Because we recently saw during COVID, like a lot of workforce went back, and that stalled a lot of projects.
Yeah. So I'll just actually take a twist on that question. It's a great question. So we speak about all these opportunities, and I had mentioned that earlier as well. What are institutions doing, financiers doing, to develop either technology capabilities or human capabilities? I mean, his question is from execution of the infrastructure, but I'm saying even as financiers and bankers, we can say green hydrogen, we can say all these fancy new infrastructure coming in, but we need to understand what they are, how do we monitor them? Do you think we are doing enough as financiers and bankers to build these capabilities out there?
I may have to take this question again. See, on the your point was from the company side, basically who are executing these projects. What we are seeing is basically a lot of like if you take the major infra, what is road? I think today the technology which is being used in road laying is one of the best internationally. So what these companies have done is they have taken the best international technologies, and then specific projects like tunneling, maybe something on the waterfront and all that. There are tie-ups happening with the international companies, what we are seeing. So I think technology and the resources for the private sector who are implementing these projects, I am not seeing a problem. So today we are able to drill the longest tunnels, whether it is in Kashmir, the most difficult Himalayan terrain, the tunnels are working. Yeah, and even in the metro we have seen. So I think Bombay you see, the tunnels are like on time they are able to drill. So I don't see a problem on the private sector side. But your point, like what Ashish twisted, it is on us actually. Actually, since the commercial banks started doing infra financing because there are no other players, so specific expertise on project appraisal and monitoring did not develop actually. There are very few people who are really capable of doing these project assessments today or funding infra and all that. And it is on us today to build these capabilities. From our side, yes, we will be working on that. There will be a lot of other agencies also will be working on that. So that talent from the financial world is not sufficient. We need to build on that. I agree on that.
Just to probably throw another perspective on this, so I think going back to your question from the government's perspective, at least what we see, there is an agency called National Skill Development Corporation, and that's, it's been there for a while, but government has kind of tried to reinvigorate that, and that agency is trying to work with various state agencies, central agencies to create and train, because you rightly brought out, we need workers, staff who are skilled to handle new technologies, new sectors. So that's happening at a macro level. From a micro level, I can tell you as NIIF how we have looked at it. Frankly, the only way to solve this is really by doing. So we have done an investment into ports and logistics. We said we don't understand that, but we have partnered with one of the best, which is Dubai Ports, which is helping us bring probably one of the best practices in the world, and that's how our staff are getting trained, and we are in kind of ensuring those skill sets. We have done an enterprise which is focused on healthcare. It's a healthcare focused fund where we have supported a set of people who are ex-GE. So these are best-in-class people who have done healthcare equipment and then you are setting up those kind of systems, processes on the ground. That's the only way to solve for it, is how we see it.
And actually, if you think about it, a lot of these aids which come or loans which come with a technical assistance component. We have to be very open to also importing some of the technical knowledge that we don't have to really create this infrastructure. I'm really being told we are out of time, so I'm going to have, lady, I'll take your question, but I'm going to, just ask one question to Gurpreet. You are in the rating agency business, so I'm sure a lot of new ideas, new product thoughts come to you because your stamp and approval and your pushback gives a lot of assurance to a lot of people. What are the new developments, innovations you are seeing on the product side on infra financing?
No, thanks. I think from the way we've seen infra, the way it's developed, I think it's actually a little bit old. In the budget 2016, Mr. Jaitley had suggested that we should look at a different way of evaluating infrastructure projects. So we all sat together, the rating agencies, stakeholders, to develop a product called expected loss ratings, which is basically nothing. Currently we rate companies based on probability of default rating. That means do you have the ability and willingness to pay in time. But what happens if you don't pay in time? What happens if there's a default? What we've realized and we've seen in the last, as many of my co-panelists said, that the projects which was done in the last 7-8 years have all been in time. We've seen a good amount of recovery happening for projects which have been stuck and delayed. Many of the projects which were really in trouble are today sitting as AAA projects in many InvITs. I think the fact that the loss given default in the infrastructure projects with the right concessions, with the right counterparties is fairly low. So what expected loss does is it looks at probability of default, multiplies that with, if you default, what's the recovery? It gives a perspective to lenders that over the lifetime of the project, of say 20 years or 30 years, what kind of losses you will make. Not whether the project will default or not, but if there's a default, how much money you get back. And we've seen in solar, we've seen in road, many of these projects, and the caveating is who have the right concessions, who've been funded properly, who have the right counterparties. We've seen the losses are very less. So even if there is default, people come back very quickly and the money is recovered. So it's a new data point. We've done almost 150 projects in terms of a pilot basis and seen that expected loss actually gives you a good perspective. And the loss given default is not one number which as bankers we've been taken. We used to take a World Bank report, say that in India if something defaults, you'll get 25% of your money back in 4 years. That is not necessarily true today in infrastructure. So the point is, EL ratings is a new concept. It is something which is an additional data point to the PD ratings. Maybe it's a high time for lenders to also look at that and be comfortable about what they're lending to. Thank you.
Maybe it's the time to come out of our earlier thought process, where we see high defaults and high losses. Maybe the last 7 years data points are different. I think based on that 7-year data point, we need to have a relook actually. As he rightly said, the expected credit loss models actually.
Lady, the last question from you.
Yes, so my question to you, Ashish, basically, you said that in the morning there were discussion how this $1 trillion money is coming from, right? Even if you say greenfield projects or infrastructure projects. So why India is also not working or thinking on liberalizing more the liberalized remittance schemes or international pooling? So for example, wherein the corporates have multi-country presence, if India also allows them to have international pooling structures, don't you think the corporate will get more funds in India for these projects?
Look, at the end of the day, ultimately the capital moves basis their own, their own balance of risk reward. I mean, there are multiple things. I mean, Prasad spoke about how you need a variety of vehicles, a variety of structures to be able to really, get the balance right. Now, how deep the market is, we just heard the market is actually not so deep. How do these risk-reward equations really play out? I think we're all on this journey, even on the road now, a little bit of a poster child for us. It took a lot of years for us to get to where we are. I think many initiatives, for example, on the Gift City side, there are multiple things that are being spoken about where some of this money can get channelized in. So I would be a lot more optimistic to say things are starting to move. I think as long as we can provide a little bit of a stable policy regime here, a right dollar return can be demonstrated over years. I think a lot of money can easily flow in. I wonder if any one of you have a perspective to add. Sorry, go on.
So I just wanted to add one thing. Even in the GIFT City, the LRS is applicable. So if you want to have free flow of capital funds in India, you also need to study what the other developed markets are doing. So there they have all international pooling structures in place.
Lovely. Sorry, thank you. We're really out of time. So my final question to all of you, which can be answered in one word, one phrase, or one sentence, is how do you see infrastructure financing in the next decade or in the decade of 20s?
I'm very bullish on this.
Bullish, okay.
That is the only way forward for our country's development.
For our country's development, infrastructure financing.
It will evolve as best asset class.
It will evolve as a best asset class.
Totally agree.
Okay, you agree with all of this?
Likewise, I think we have said, this is clearly the largest opportunity or one of the biggest opportunities as we see it, and it will be tackled through a multi-pronged approach again, I'll say.
Wonderful. What an optimistic way to end day one of FIBAC. Thank you very much. I know there were a lot of more hands raised up, but thank you so much for being very patient with us. Thank you, panelists.